Before we start with FM, I just wanted to know from you all that do you all have any doubts or queries or questions in regards to FA and FM both uh, for the syllabus of internals? I repeat, do you all have doubt, queries, questions in regards to FA and FM for the syllabus of internals? If not, then we will go ahead with the chapter of dividend decisions, which we are pending to complete. I did not get any response from your side.
Sir, can you explain YTM, the concept part?
YTM is a yield to maturity. That means that if you purchase any investment today and hold up to maturity, then what will be your yield? YTM is a yield to maturity. So if you hold any investment up to its maturity, then what will be the yield? That is what we calculate in YTM.
Okay, sir.
Anything else? Let's go ahead with the last theory for dividend decisions, that is hypothesis or model, or it is known as Modigliani and Miller hypothesis. Did I give you any question for homework? Was there any question given for homework?
No, sir. No, sir.
Okay. Okay. So, as per the Modigliani and Miller hypothesis, that is hypothesis, they say that Modigliani and Miller says that there is no effect of dividend on value per share from the point of view of investors. They say that the wealth remains same, wealth remains same, dividend is declared or dividend is not declared. So this is a dividend policy which is indifferent in nature. That is, company should not think too much about dividends. Okay, whether they declare or they don't declare, the wealth for the investors or the value per share remains the same. So based on this hypothesis, the formula for value per share is P0, that is value per share to share plus dividend per share at the end of the period divided by 1 plus K. Okay, so P0 is nothing but market per share the start or prevailing market price. P1 is market price per share at the end of period. D1 is equal to dividend to be received at the end of period. And you all know P is nothing but is cost of equity or opportunity cost. Please copy this down. Let me know once it is copied at your end. Is this copied? Shall we go ahead?
Yes, sir.
I did not hear from you all. It should not take so much time for you all to copy this. I think we should go ahead. Now the next point which I discuss is that whether the company should give dividend to shareholders or whether to retain that. Okay. If the company has an objective of investing more money in business, that is for expansion plan or new projects, then a company should not think too much between issuing new shares or retaining the profits. Okay, you have two options: either you distribute dividend and issue new shares, or you retain the profits to reinvest. So whatever may be the case, your wealth for the shareholders will remain the same. Okay, I repeat, there are options available. One option: do not declare dividend, invest the retained earnings in new project, or number two, declare dividend and issue new shares for investing in new project. So company should not think in between these two, that whether I should not declare dividend and invest retained earnings, or whether I declare dividend and issue new shares. Whatever may be the case, the wealth of shareholders remain the same. So whichever option a company chooses, the wealth for shareholders will remain the same. Is this clear? The formula what we have written down can also be rewritten in a different format, and that is, we can write price at the end is equal to price at the start into 1 plus KE minus dividend at the end. The formula can be written in two different manners. It is just a rearrangement of what we had written earlier. Please copy this down as well. So if you want to find out price at the start right now and you know the price at the end, you use the formula what we have written first. And if you want to know price at the end, from the data what we have, that is price at the start and dividend at the end, you can use anything. It is just a rearrangement of data, wherein if you see, the denominator is taken over here and this one is also taken on the LHS. That is just a rearrangement of data. Is this understood? Any doubts, any queries, any questions? We need to now start with the practical questions of MM. So let me know. Write down a question. ABC Limited has a capital of rupees 1 lakh. ABC Limited has a capital of rupees 1 lakh in equity shares of rupees 10 each. The shares are currently quoted at par. The shares are currently quoted at par. The company proposes to declare a dividend of rupees 10 per share at the end of year. The capitalization rate for same class of shares is 12%. What will be the market price per share at the end of year if number one, dividend is not declared, number two, dividend is declared. So we need to find out market price at the end. That is, we need to find out P1. Price at the end, that is P1, we need to find out, and the formula that as per model is P1 is equal to P0, price at the start, 1 plus KE, that is cost of capital or capitalization rate. Guys, what did I write as formula? I think at the top I wrote plus dividend, right? It is minus dividend. Let me just recheck. Minus. This is correct. This is what I was talking of. I had a doubt whether I have written positive or negative. That is negative minus 1. That's correct. So this is the formula which we have to follow. We have to find out price at the end. How much price at the start? Can somebody tell me from the question? From the data given, can you tell me what is the price at the start? What is the current market price?
10 rupees.
10 rupees. That's correct. Okay, so P1 is equal to 10 is the price at the start given. 1 plus what will be the cost of equity, cost, opportunity cost? The question is giving you that the capitalization rate for same class of shares is 12%. So can I say KE will be 0.12, and we are assuming that the dividend is not declared. So can I say dividend at the end will be 0? 10 into 1.12, that is, can I say the answer will be, जल्दी बोलो, easy calculation.
11.2. 11.2.
11.2.
11.2. How much is the price currently? Wait. 11.2, right?
Yes, sir.
What if the dividend is declared? If dividend is declared, P1 is equal to 10 into 1 plus 0.12 minus 10 is equal to 10 into 1.12 minus 10 is equal to 11.2 minus 10. Answer is 1.2 per share. Did you all get this?
Yes, sir.
Yes, sir.
Okay. Let's write down another question. Easy, simple, straightforward.
Yes, sir.
Okay. Write down next question. PL Limited belongs to risk class for which the capitalization rate is 10%. The company currently has 10,000 shares outstanding, quoted at rupees 100 per share. The company is planning to declare a dividend of rupees 5 per share at the end of year. During the year, a net income of a net income of rupees 1 lakh is expected, and the company to expand with additional 2 lakh. So, how under model the payment of dividend does not affect the value of firm, right, or of company. Let's read the question once more and then we start with the solution. PL Limited belongs to risk class for which the capitalization rate is 10%. The company currently has 10,000 shares outstanding, quoted at rupees 100 per share. The company is planning to declare a dividend of rupees per share at the end of year. During the year, a net income of rupees 1 lakh is expected and the company wishes to expand with additional capital of rupees 2 lakh. So how under model, the payment of dividend does not affect the value per share. Now, what are you supposed to do is, you have to prove that, I repeat, you have to prove that if the dividend is declared and the company wishes to, I repeat, if the company declares dividend and the company wishes to expand with the project of 2 lakh rupees, by issuing new shares, what will be the value per share at the end? Other way around, or if the company does not declare dividend and expands for the capital of 2 lakh rupees, what will be the value for the company? And as per model, the value for company, whether dividend is declared and expansion project is taken, or the dividend is not declared and expansion project is taken, the value for both the companies remains the same. So you have to prove that value for both the companies remain the same. In that case, first what we have to do is, we will have to find out value per share at the end if dividend is declared and if dividend is not declared. So let us find out market price per share at the end. Which is P1. P1 is equal to P0, price at the start, 1 plus KE minus dividend at the end. We have to take up both the cases, if dividend is declared and if dividend is not declared. So first we take if dividend is not declared. P1 is equal to, what is the current market price of share? What is the current market price?
100 rupees. 100.
100 rupees. Yes. Correct. So 100. What is the capitalization rate given to you? 10%. Not declaring
10%.
dividend. So dividend at the end is 0. 100 into 1.10 minus. So we get an answer as 110 per share. if dividend is declared, P1 is equal to 100 plus 1 plus 0.10 minus 5. The company wants to declare 5 rupees as dividend. Did you get 110 and 105?
Yes, sir.
Yes,
Yes,
sir.
Now everybody please just look at the screen. Check what am I doing and then okay. Now we will do of shares to be issued under condition that dividend is paid. Dividend is not paid. So you will have to column and purchase. We start the net income of 1 lakh rupees at the end of year. So net profit will have profits whether dividend is declared or dividend is not declared. Can I say the profit remains the same? From this, we will reduce dividend paid. In the first column, we are assuming that the dividend amount will be nothing, zero. But for the second column, dividend paid, we will have a dividend of 5 rupees on 10,000 shares which the company has currently outstanding. Company has currently issued 10,000 shares. So on that 10,000 shares, company will pay 5 rupees per share, that is 50,000. So you will have retained earnings 1 lakh and 50,000. Please do not copy. I'll give you enough time. I'll show you again to copy. As of now, just look at screen and understand that what we are supposed to do and how we found out retained earnings which are available for us to be capital of 2 lakh rupees. So let's go ahead. Investment budget 2 lakh and 2 lakh. Whether dividend is declared or not declared, our investment remain same. Out of this investment budget, can I say that first we will utilize and for the balance we will issue fresh shares. So less retained earnings 1 lakh and 50,000 for second column. So we will have amount required which will be 1 lakh and 1 lakh 50,000. Now in the first column we have assumed that the dividend is not declared. Okay, dividend is not declared, then the price per share at the end will be 100 rupees. We have calculated that if dividend is not declared, then the price at the end will be 110. We require 1 lakh rupees and price for one share is 110. So can I say that if we were supposed to issue shares, then how many shares we would have issued? So number of shares is equal to amount required divided by market price at end. In the first column, can I say it will be 1 lakh divided 10, and in the second column it will be 1,50,000 amount required, and the market price at the end for dividend declared is 105. The answers will be somewhere 909.09 and 1428.57. Now this is shares. Okay. Now everybody please listen to me carefully over here. You cannot issue shares in fraction. You have to issue. If you say that we will round off, while rounding off, we get to know that in the first column we will have to write down 909. Now, if you issue 909 at the price of 110, can I say that you will never get 1 lakh rupees, which is required from your end? So you will have to issue 910 shares. And when dividend is declared, you will have to issue 1429 shares. You cannot round off, you have to take one digit higher. So by issuing 910 shares, when dividend is not declared at 110, we'll get amount required, and when dividend is declared, we will have to issue 1429 shares to get the amount required of 1,50,000. Now we need to find out the value of the company after the new shares are issued. So calculation of value of company. Again, dividend paid and dividend not paid along with particulars. We start with existing share, existing number of shares, 10,000 and 10,000. Existing we had 10,000. To this we add fresh issue of shares is paid. So total number 10910 and 11429. If you want the market price per share, so market price dividend is not paid 110, which is calculated by us, and 105 when dividend is, which will be shares into market price. Can somebody calculate and tell me? Is somebody speaking? I'm not able to hear anything from your side.
So for first column, it is 12 lakh 100 rupees.
Ten thousand into 910, you should get an answer of 12 lakh and 100 rupees, and 11,429 into 110, 105, sorry, you should get an answer of 12 lakh 45 rupees. Yes. can I say that yes, there is a difference? We can see that there is a minor difference of 55 rupees. But can I say that we had rounded off the number of shares? And this difference is because of rounding off, nothing else. If you go and check at the exact number of shares, there won't be any difference. But we are finding out this difference because there is rounding off. So due to round up to be issued, there is a minor difference in company. Yes. Can I say that we have proved that whether dividend is declared or not declared, the market value remains the same. Now copy this down. You need copy from here. Let me know once it is done so that I can scroll up.
So can you show the starting the solution? I'll take the screenshot.
Why do you want to take screenshot? You write down in your notebook.
Sir, actually, I my network is not proper, so that's why I'll write from the calculation now, and I'll write afterwards from that part.
Done, sir.
Done, sir.
Yep.
Done, sir.
Okay. I hope you all have done up to the number of shares, right?
Yes, sir.
Okay. Now calculation of value of company.
Done, sir.
Also write down this sentence about rounding off.
Done, sir.
Done, sir.
Okay. Now can you solve one question on your own? I give you one question on the same line. Try and let me know. D Limited has 1 lakh equity shares outstanding at the start of year. The shares are quoted at rupees 50 per share. the board of directors are of the view to declare 2 rupees per share as dividend at the end of year. Capitalization rate for same class of shares is 12%. Number one, based on approach, calculate market price per share if dividend is declared and B, dividend is not declared. Number two, the company has net profit of rupees 20 lakhs at the end of year, is wishing to expand with a new project having investment of rupees 30 lakhs. Prove that the value of company remains the same irrespective if irrespective if the dividend is declared or not. Can you all complete this on your own? Check this question with the earlier question.
Sir, can you show the start of the question once?
Yes. Those who have written down the question can start solving.
Done, sir.
Yep. Everyone, please start solving. If at all you have doubts, unmute and ask me. Is the question done? I'm waiting for your answers. How much is the price when dividend is declared and dividend is not declared? Can you give me these answers? Dividend is declared and dividend is not
When
declared.
it is declared is 14.8.
Not declared 16.8.
Not declared is 16.8.
Okay. Did you get number of shares? I need
Yes,
two
sir.
things from you now. I want number of shares when dividend is declared and number of shares when dividend is not declared.
When dividend is declared, it is 81,000 81.08. So I made it 81,082, 81,082.
Correct.
And when
Correct.
dividend is not paid, it is 59,523.809. So it comes to 59,524.
Perfect. Correct me if I'm wrong. What will be the value of company?
So when dividend is not 6 lakhs 80,032 and dividend is paid, it is 26 lakh 80,014 rupees.
If you can give me figures again. 26 lakhs.
80,014 for first case. So for
Hmm.
first, so for dividend declare, I told you
Yes. And what about dividend not declared?
26 lakh 80,000.
I did not get the figure. Your voice was cracking.
So it is 26 lakh 80,000 and 3.2.
Yes. You
3.2 is there.
and you will write down the standard statement that there is a difference because of rounding off. Do you all have any doubt, queries, questions?
No, sir.
Now this marks the end of the chapter of dividend decisions. Next time onward, we'll start with the new chapter. I repeat, please start studying. If at all you have any doubt, queries, questions in the next lecture, unmute yourself and ask me so that it becomes easy for me to solve those doubts first and then start with the new thing. Thank you all so much, everyone. I have taken up attendance. You all can leave.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you so much, everyone. Thank you so much, everyone.